Hi, this is Zach here with the weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 27th of April. Starting off with the FTSE 100, where we've had apparently 10 days in a row on the up. As you can see from all those blue candles, that's the best performance since 2019, apparently. We've also got the RSI above neutral 50. FTSE is above the rising 200-day moving average at 83.44, and the longer we stay above that, the greater the chance of move up to the 50-day line. 85.20, which I suppose anything above 8,500 would actually say that we've cancelled out the Trump tariff debacle after having discarded all the weak hands down to 75.44. Above the 50-day line, next level up, obviously 8,700, but the main thing now is actually just to get above 8,500. Below the 200-day line, risks a move down to the floor of the rising trend channel from late 23 at 82.10. But that is the worst that we feel we might have on them at the moment. Obviously, Ukraine-Russia developments permitting. Moving along to the DAX, and here a bravura performance, in fact, because it's a bear trap island reversal, one of the biggest in the recent past, because we gapped down on the left side and gapped up on the right. The key here was that we managed to hold the top of the gap there from Wednesday, and have broken through the 50-day line there at 22,200. Above that, well, the next level up the gap to fill up towards 22,800, which would be quite a feat. Worst case at the moment is we've got to go down and fill the gap down from last week, 21,300. But hopefully, with the performance that we've seen at the end of last week and the push for the RSI through neutral 50 to get back to 56, the downside will be limited. Still, it is the case that unless we hold above that 22,500 zone, still a chance of a failure for this market. Moving on to the Dow, and here we've had a situation where we've been below RSI 50 since February the 20th, which was basically the doomsday for most of the stock market. My old rule of buying on bonfire night and selling at Valentine's Day would have worked rather well and would have avoided all the tariff activities, but well, let's see how we do next year on that particular rule. In the meantime, got resistance here, 3 times resistance there at 40,800, and really while we're below that and below RSI 50, we're still vulnerable. Downside at the moment, hopefully limited to 39,300, which is the floor of the latest gap for this market. Moving along to Bitcoin, which apparently has had its best week since back in November. You can see we're in a bull flag, hopefully a mid-move consolidation. Back above the old 90,000 support and the 200-day moving average at 89,000. And the longer that's the case, the greater the chance of move to 100,000, hopefully over the next couple of weeks. Best case by the end of next month, which is maybe pushing it, would be up to 120,000 at the top of that rising trend channel from back in March. Moving along to gold, where I suppose if things get better on the equities front, one would think that gold might pull back, but it's still doing rather well. Rising trend channel, the black one there, floor of that channel there around 32.40, and above that we are looking for a best case scenario target as high as 3,800 by the end of next month. Presumably that would not be triggered by a nuclear war. Perhaps the line a little less steep than I drew it in originally, but obviously these things are always a little bit of a movable feast, and I've just moved it. But it's still the case that above 32.50, we've got a best case scenario target there as high as 3,800 by the end of next month. Moving along to pound dollar, where 130, it's all been about $1.33. Above that, we could have a break to the upside, and below that, we could be back to 132 or even, I suppose, 130. But at the moment, the market keeping us guessing. The price here for pound bulls, if there are any, is that through 133 on a sustained basis, maybe up to 134. If one wants to be fussy, then the prize would be up to $1.40, maybe by the end of next month. But given the interest rate outlook, which is supposed to be 2 cuts, one in May and one in June, one might be backing a consolidation at these levels. Maybe onto the stocks, and too many, I suppose, at the moment. A lot to choose from, and difficult to narrow it down. So I haven't really narrowed it down. We had great RNS from BSF on Friday, which obviously the crackpot bears tried to kill, because obviously they were betting on this stock going down and well, maybe going down to zero. Current position here is that we have toyed with the 200-day line, 3.1 pence on Friday. In fact, we went through it, basically tested the January resistance at 4 pence. End of day close above the 200-day line. We could still get up to the top of that broadening triangle from June, as high as 5 pence plus by the end of next month, giving it a bit of time. Ideally, we stay above old resistance on the way down, around 2.4 pence. I think that gives it a bit of wiggle room in case the bears keep on giving this stock a bit of grief. Moving on to stock which is looking decent at the moment, which is Beacon, and here you can see that the shares have managed to end the week on a high note. Looks as though, well, the first sign that we've got a rising trend channel base, so all those days just nudging that uptrend line there over the last, well, late March uptrend line. If that is the case and we hold 0.003, then we are looking up to 0.07, call it 007, maybe by the end of next month, but obviously that's slightly speculative at the moment, but then again, what isn't in this area? Moving on to Coinsilium, which is an obvious beneficiary of the current state of Bitcoin. Shares already pushed up or recovered well, as we've actually already pointed out the rebound. The floor of the channel there around 2.6 pence, we're previously saying around above 2.5, looking for 5.5 on this by the end of next month, gapping through the 50-day line last week. A positive, very positive move. And as I said, 5.5 pence hopefully on its way by the end of May. Moving on to eStar, which is also looking decent at the moment. In fact, the situation here was missed in a way, because we had a gap close by signal on the 17th of the month, 10 days ago, and have actually built on that. Initial target here, 1 3/4 pence. Best case scenario target by the end of next month, as high as 2.5 pence, which is the top of that broadening triangle from back in at the beginning of the autumn. I did say that, I have said previously that Eco Buildings looks as though it's a bit of a difficult situation to get a handle on. We've had many false dawns here. This may be another false dawn. We've got a falling trend channel there. I want to see an end of day close back above, well, properly above the 50-day line at 5 pence. Closed on it on Friday. And that would suggest then we could get up to the top of that falling trend channel at 7 3/4 pence, but not that much to go on here, apart from the break of the RSI through the 50 level, which is the first time since the beginning of the year, as well as closing on that 50-day moving average, which normally you need a bit more to snap an extended bear run. Electric Guitar did what we wanted it to do, which was to close back above the initial April support there at 005. Above that, on an end-of-day close, we've been looking for up to 009, and hopefully we'll get that early in May, maybe over the next week or two. Suppose it may be too early to dream of a move to the 50-day line at 0.18, but given the market at the moment, which seems to be quite strong, that could potentially happen while we're above 0.05, although I suppose that's for June rather than May. On to first class metals, which seems to have got over the mudslinging that the company's had over the last couple of months. Here you can see that we're close to closing that gap there. We had a couple of at least one end of day close above the floor of the gap there, March gap there at 1.16 pence. Above that, looking for the shares to not only fill the gap up to 1.37, but I suppose really get up to the 200-day line, 2.14. Best case up to 2.85 by the end of next month, while we're above that 1.16 level. You can see from the recent rallies that it's been the 200-day line the shares have gone to, rather than just the 50-day moving average. On to GreenRoc, which has been one of the happier situations in the recent past. Mid-move consolidation breakout. We've got 50 and 200-day lines both rising into a golden cross, which will happen hopefully next month. And the target now that we've hit, we've blown out the first target there at 2.4 pence, up to 3.5 pence, which was the support on the way down. So hopefully we'll get that in the next few days. I suppose it's not even too early to suggest that 4.5 pence could be the target by the end of next month. We'll get a quick result on 3.5p. Myriad is next, and here it's been a slow burn, very slow burn, I think, basically since December, but great close for the week. Last week above the 200-day moving average, second time lucky there. That's at 0.3232. Initial target now 0.5, hopefully over the next few sessions. Best case by the end of next month up to 0.8p. And that would take the shares back to where they were basically in June last year. Decent bubbling up for Nuformix, which has been, again, another very slow turn there. It's like an oil tanker turn, even though obviously a very small cap stock. We found support at that broken resistance line there from this time last year, around 0.11. Above that, we're looking for 0.26, perhaps by the end of next month. Nice RSI bounces above neutral 50. You could say we've had 3 or 4 of those since the end of March, which is quite impressive, and support coming in well above the 50 and 200-day line. So it looks as though Nuformix has finally cracked it. Speaking of cracking things, we had a decent move for Phoenix Copper on Friday, and obviously here the hope is that the money will be coming in for the copper bond. We had the support for Friday at the 50-day line, 3.8p. Still looking for the previous call there, 6.5p by the end of next month or even sooner. Also a gap close buy signal, which in fact I suppose we had as long ago as the 10th of this month. So looks as though apart from I think the funder there at 3p, we've also got the 6p target on track now, and have had bounces for the RSI at neutral 50. So looking rather better there than it has for quite some time at Phoenix Copper. Space and People is next, and here we've already broken an initial target there up to 123p. Above that, looking for 147 by the end of next month or even sooner. The way things are going, I suppose you could argue that the shares are actually in a rather larger rising trend channel, top of the channel there, heading for £2. But obviously let's not get too excited too soon on that, even though it looks as though there's every reason to be excited. Only back below the initial target there, 123, delaying the upside scenario. On to Silver Bullet, which was a bit of a hero during the early part of last year, but obviously they let the advantage slip. Here we've got a potential rising trend channel base. Top of the channel there at 62p, looking for that by the end of next month. We can get a swift end-of-day close above the 50-day moving average at 40p. RSI now pushing through the neutral 50 level quite well. Upside valid, at least while we're above recent resistance, around 34p on a mid-price close basis. Now, always nice to have new names, and Tracsis is one of them. Here we've got an uptrend line in the RSI windows. That's bullish divergence, bear trap rebound from below the initial April support there at 295, and breaking recent neckline resistance at £3.40. Above 340, looking for the top of that broadening triangle from back in January at £4.55 by the end of next month. Finishing off with the rebooted Wishbone Gold, and here you can see that although on the bigger scheme there's not much has been done, but looking closely, nice rebound there, higher lows there, and Friday's price action very strong, opening at the low, closing at the high, which is normally a follow-on signal for a couple of days. Obviously, it would be nice to see the shares back above the 50-day line at 0.15. They haven't been above the 50-day line since back in October. And the initial target here for the end of the next month up to 0.21, which is the top of that rising trend channel base. RSI is also broken above neutral 50 again. That's it for me today. More updates during the week.